Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and it's your daily midday market minute. Got another risk-on day, and the treasuries are confirming it, and the dollar is powering things too. But the S&P, you see this on Monday. It hit the 50-day moving average. It hit a trend line, and it responded. Buyers were sitting there waiting. It's become systematic, and you have these corrections when it happened in February, happened in March, happened in June, happened in May. The market has responded in the 50-day moving average, and it's recovered. Now, most of those times we saw a retest, and not saying we can't right now, but as we're seeing things, the market is rolling higher, and it is risk on. You can't fight days like these. You can't fight days like yesterday. But you do have some resistance overhead, 43, 45. It's a trend line from the highs in the S&P. Same thing, the NASDAQ is running into resistance. We have noted on the Morning Express, 14,780. It is slowing things. We'll see where this closes. Do we close out above there? Do we start falling back and start to encourage a little bit more of a consolidation? I guess we'll have to see. But again, treasuries are confirming this. You're seeing yields snap back to almost where they closed on Friday for the 10-year. Big reversal in the 10-year, even bigger reversal in the 30-year. And the dollar, weaker dollar has been basically a risk on. It's been the sacrificial lamb for the global economy over the last year, and the dollar can't close out above 93 for the index. And it's another stall as we go into the ECB tomorrow. So with that said, ECB tomorrow, prepare for remarks that are going to bring in extra volatility. Crude oil is bringing a tailwind to the risk on as well, to the equity side, but crude oil itself trading out above $70. 70 and a quarter was top side of major 3-star resistance. Good move. Today's inventory report really, from the headlines, wasn't very bullish, but you take a look into it, the numbers, net imports picked up about 2.5 million barrels per day, explains the tepid numbers, and really gives you a sense of a lot of demand, that it was digested last week overall. So we're seeing crude bounce back pretty sharply, digested that OPEC news, digested the Delta variant headlines. And speaking of those Delta variant headlines, it's been enough. We've been calling peak Delta variant headlines for about a week now. Obviously, pinnacle yesterday was what we said. And, Bloomberg this morning tried to put it out one more time. And that was really the signal risk on, saying that the U.S. Isn't prepared for new variants. I think, we're going to start to see this subside. Second half of the year, bigger growth is going to come, and you're going to wave a tailwind into that growth. I think that's what we're going to see. So look at crude oil. Listen, we're not going to see, nothing's a directional move. Where do we close today? Where do we close the week? ECB tomorrow. There's still a lot of volatility. Flash PMIs Friday, so stay nimble out there. And then for gold and silver, silver is showing some signs of stabilizing. It hasn't bounced back like other commodities. Still the bottom end, 25 and a quarter is a good area of support that's building. Gold though, 1793, 1796, it's worked again 2 days in a row. Even though you got a slightly lower low, it responded from there, consolidating. We do think though that rising Treasury yields will pose a headwind for gold. Silver, look for silver to outperform if these metals get going. But we're very cautious of the metals right now. Give us a call. Our trade desk is here to help talk about these markets, risk management, 312-278-0500. Remember though, futures trading involves substantial risk of loss, and it's not suitable for all investors.